On this day, May 20th, a lot of traders online did get chopped up in this consolidation, and I know a lot of people started going online and were posting about how the market conditions were awful. What is this? And if you just look at this mess here, yes, it does look very bad, right? We're just in a massive, massive range. But I've taught my members that when you're in a range, you want to be trading the edges, right? You don't want to be taking internal setups. You likely preferably want to take setups where we do sweep some sort of liquidity, so you're on the right side of the market. And drawing liquidity is also very important. I'm just going to go give examples today of May 20th where I was able to bake 3 winning trades, right? 3 winning trades, and I know a lot of other people were probably just losing their mind and just taking L after L. And if this is you should stick to the end of this video, because I'm going to explain to you guys how you can handle your trades better in these type of market conditions when we have very slow price action, or price action that's very choppy and takes forever to hit your TP, because that's literally what this was, right? An hour to hit my TP here, about 44 minutes. Technically, if I held the whole thing, it would take 3.5 hours. This one took an hour, which is still a long time compared to my average trade duration of 30 minutes or less. So market conditions were definitely not favorable, but I was still able to come out very green of 8 risk reward here. And before I show you guys this, look, I sent this to the group. And you can check the time if you want. This is in my Discord group, my Discord paid community. If you just get the E200 risk reward course or the one-on-one mentorship, you'll get access to the group chat, private group chat, where I send my trade ideas and such, my draw and liquidity, things like that. And you can see, I'm literally saying I'm expecting us to have a big move to downside for potentially very aggressive TP. If you want to keep it aggressive or be more safe, you TP here, which is at the low here, which people were in a trade in, and that was literally these lows right here, right? Whether you use equal lows or not, I personally don't. These are just very obvious lows to target here, and those were a very good target here. And I'm saying that because we're creating a new range, new value, not consolidation. You don't want to get swept out prior to those lows getting taken out. And of course, it says some other stuff you can read here, and I don't mind risking this, right? So again, I was predicting my draw on liquidity was a huge move to the downside. Look what happened. We had a massive, almost 1% move to the downside here. How did I notice ahead of time without any of this happening? Well, I don't trade off just pure reactions, right, guys? If you're trading just off pure reactions, you're almost no different than an indicator. You're almost no different than a someone that just says, oh, price looks aggressive here, or price looks passive here. Buyers are stepping in, sellers are stepping in. I don't like it when a lot of people are saying words like this, because majority of the market, 80% volume, is ran algorithmically, and these algorithms are also competing against each other, right? In the whole sense of the market. So when there's a ton of aggressive buying or selling, to me, that doesn't really mean anything, because anyone can say there's tons of buying or selling. You need to keep it more mechanical, make something that's more simple and straightforward to define, right? Not something just with order flow. Me personally, I don't have anything specific against order flow. I just think it's not a very mechanical way of trading, and I prefer something that's more back testable, if you know what I mean, right? Something that can objectively prove it works. Order flow is, to a point, discretionary to me. Like this, there's sellers here stepping in. Look at this candle. There's sellers stepping in here, sellers stepping in here, sellers stepping in here. And obviously you're probably not gonna be shorting this, right? You need to have very specific price points ahead of time, and you're drawing liquidity. You need to be anticipating the market, essentially. And that's what drawing liquidity comes into play with context. You add up confluences that occurred ahead of time already into your trade idea, and then you trade in that direction. And any other structural differences that are against your drawing liquidity are typically sweeps. That's how I view structure for the most part, basically the most simplistic way of viewing market structure, which is anything that's against your drawing liquidity is a sweep, liquidity sweep. Anything that's towards your drawing liquidity is a break structure. I'll go in the higher time frame real quick here. We'll go in replay mode real quick so I can show you guys price better here. And yeah, I'm gonna keep that off. I'm probably gonna keep we'll keep the IFG indicator on. Kill zone sessions, yeah, we'll keep those on. Why not? But on this day, again, like I said, I was anticipating price to have a huge downside move. That's because my draw on liquidity was to the downside, but also understanding new price. Look at how price is reacting, and this is based on experience, and I'm teaching you guys complete for free on here, right? When price is consolidating, whether it's swing structure consolidating, or we have fractal structure on a lower time frame consolidating, maybe something here, I'll find an example here, something like this, we're expecting a big move majority of times. Sometimes we don't get that, And sometimes this consolidation might just purely just be low volume and volatility, and likely the whole session could be like that too. In that case, you just hop off the chart. Don't take trades and chop. You're just going to lose your account or lose a lot of P&L at least. But usually when we get consolidation like this, whether that's fractally in a seconds, 1 minute, 5 minute, whatever, you can expect a very big move. This is a massive swing consolidation. If you go to like the 15 minute here, like look at the 15 minute. Usually I like to use, I mean, you can really use any time frame really. I mean, 5 minute, 15 minute, 30 minute, 1 hour, you can clearly tell we're in a box. Price doesn't have a direction at all here. We're just consolidating for 5 hours in a box. We have not moved outside really this box the whole time. Typically, price loves liquidity. Price is attracted to liquidity. It will take liquidity highs and lows, but in this case, it's not. At least it's not taking external highs and lows, which are what we like to see. It's taking more so internal and creating this new range. Hence, when I saw this occurring, I was anticipating a huge move, right? Expecting us to have a big move to the downside for potentially very aggressive TP. So that was my draw on liquidity and how I was able to anticipate the market. Now, what was my context? How do I know this? I'm not here to predict the market 100% of times, or I'm not a market maker. How do I know this? Well, look, pretty clear to me here, right? I'm going to move that to the side here. We took out a high. We were bullish externally, by the way. If you go to the 1 hour, 4 hour, we're bullish. And then we also took out a high twice. Typically, we like to have 2 break structures, 1, 2, before we do a reversal. Typically, sometimes it's 3. And then we had this low taken here. We actually had an SMT here with NQ. So NQ took out the low, but it failed. And you can see ES failed to go higher, or at least even come back to at least mitigate something. If ES came back to 50% of this range here, you can still expect a mitigation cycle to go higher. But no, we failed and we closed below here, right? The close isn't too important to me, but obviously it does play a factor. Liquidity sweeps typically we reverse much faster or almost immediately. If we're like consulting or taking a very long time to reverse like this, a lot of bearish candle bodies, again, body versus wick closures, it's a lower probability sign, right? So to me at this point, this was my change of character. I'm not considering this a liquidity sweep like it used to anymore, because we had SMT here that literally failed. Like NQ literally made the liquidity sweep, but it still failed to go higher. Using that as confluence, this is more likely a change of character. So what happened here? Well, since my bias is now bearish, you know, when we're bearish, you take out highs as liquidity. So what happened here? Well, we took out liquidity here. We took out a high. We took out this high. We also took out this high. But this is the main high we're looking at, because this main high made a new low, right? This is more so internal liquidity. And then we create a break structure. So at this point, I was literally anticipating us to create another break structure, essentially creating that new 15-minute, 30-minute structure. But we're trading on the 1 minute. So keep that in mind. When you're trading on the 1 minute, I'm going to go over something very important real quick. Look at this. Look at the closure here on the wick. Look, you see how it just barely wicked it. Why? Because wicks do the damage. People put their stop loss exactly at the high, typically, or maybe 1 or 2 ticks above. And that's why people get manipulated out of the market. They don't wait for confirmation, or they just have their stop losses up there and they get manipulated before price goes down. Someone has to win to lose. It's a zero-sum game. If you can understand it's a zero-sum game and understand manipulation like this to a high level, you will be very successful and very rich trading. That's all I can say. So here, one thing I really wanted to note here was, I'm not going to call anyone out because this is a learning lesson, but I know some members in the course, some of my students, they're taking, where was it? I think it was either this IFU setup here or this one. I can't remember which one it was. I'll have to double check and look back. But it was one of these shorts here, right? So we'll just use an example here. I'm just going to place it randomly to pretend you're shorting here. My draw on liquidity for, let's say I took this trade and I entered short here. My draw on liquidity is this low, correct? It's a weak low. But look, we have new ranges and new structure forming right prior to that low. Can we potentially run both of these at once? Yes, we can. But what are the odds of us running both of these lows, or at least this extreme low here, before price hits your stop loss? That's what you have to think of every time you're in a trade. You have to think of where your entry is, your stop loss, and your TP, because that determines the outcome of your trade, right? So if you were shorting up here where I shorted originally and targeting a weak low, I don't mind this. Why? Because you're catching the initial move of the structure. This is literally off an origin here. You're catching an initial move, start of the move. This is not catching the initial start of the move unless your stop loss is covering the initial start of the move, sure. But you're not taking a one-to-one here like this. This is, unless your strategy tells you, this is not my strategy. So basically, yeah, you have to keep in mind, where's your stop loss, where's your TP placement. If you TP'd at the low, you would have actually hit TP here on futures, because equal lows, equal highs on futures, they count as a TP or stop loss as long as there's volatility or volume. So, or liquidity basically. So like, this is something you have to keep in mind, right? If you're looking to catch the bigger move, you need a bigger, wider stop loss to cover at least the extreme high or low. Is this situation? You have to ask yourself yes or no. No. What are the odds of price hitting your stop loss before hitting your final TP or your actual TP? If you have a very far TP, you have to ask yourself these questions. The odds of this is low. Considering price and conditions, you have to consider price action, right? This is why we have to adapt to the market conditions. You cannot just keep trading and spamming entries and thinking you will be consistently profitable and very profitable with a very good trading system and very good win rate. You have to add some context into your trading, which can be fully mechanical as well. But my point is, you need some understanding of price action and market conditions. You have to adapt. If you can't adapt as a trader, you can still be profitable, but I'm going to say it's a lot less likely. It's like going to be definitely a lot harder. Look at how price is delivering the whole day here. This was all right? We have an impulse delivery here, so we have an impulse down. But, everything else is just very choppy, right? This was already a clear sign in the beginning. And you guys know, overall, the market was just very choppy in general. Clear signs, right? So considering the month of May, we just had tons of chop. You want to have shorter TPs. Manage your trades more aggressively. So those are the 2 tips I have for you guys for navigating harder conditions where we have lower volatility and more chop and it's more consolidation. So 2 tips really to take away from this. Number 1, manage your trades more aggressively. What does this mean? Trail stop loss, break even, whatever you do in your system. I rarely trail my stop loss, but this is one of the situations where I did trail my stop loss because I recognize these market conditions are not favorable in delivering straight to my drawn liquidity. We can literally get these new ranges, and at that point, who knows if price will deliver towards my TP even at the end of the day or not, if we're just going to consolidate the whole day. So manage your trades more aggressively, break even, trail stop loss. If I can think of other things, yeah, that's basically it for manage trades. Number 2 is have shorter TPs. So closer TPs. Keep it conservative. You have different types of TPs. I talk about this in depth in the course, very mechanically, how we define very conservative, aggressive, and very aggressive TPs. We have 4 different types of TPs I use in my trading system. You preferably keep it conservative or very conservative when you're trading in market conditions where we're chopping around, things like that, because you don't want to get caught up in the chop, right? Something like this. Your complete trade idea was completely right? It's just in a bad market conditions, it's very unlikely to hit like this. If we had very good market conditions, 100%, this likely would have hit without hitting your stop loss before though. But with bad market conditions like this, it's more likely to hit your stop loss before hitting that TP. So hopefully that does make sense to you guys. Remember, 2 tips in bad market conditions. If you have one thing to take away from this free video, manage your trades more aggressively, have closer TPs, keep it conservative, and try to make these as mechanical as possible so you're not thinking and double guessing yourself. So hopefully that makes sense. I'll keep this screenshot on here just because it's low-key looks like a frame real here. I'm gonna go over now basically the trade recaps. I don't think there's anything else. I'm trying to think if there's anything else I need to cover in terms of how you can manage your trades better or trade better in ranging conditions or bad market conditions. Again, those 2 things, basically how you manage your trades, where you place your stop loss. One more thing would be obviously trade from the edges, right? Try to wait for liquidity sweeps to occur instead of trading within the range here. Like if you're, even then you could trade in the range. It's just very, very low probability. And your TPs are going to be very tiny, right? If you're taking a trade like this, for example, you're going to TP at 1-to-1 basically here because remember, you're keeping your TPs conservative. You don't want to be targeting anything far because of the market conditions. I'd rather you make one risk reward, for example, and adapt to market conditions than you take a -1 R loss because you couldn't adapt and you don't understand market conditions, right? Hopefully that makes sense. I'm gonna do a trade recap real quick here. So here, this was again because of market conditions, just a very big stop loss. Nothing I can do. I think one of our members he actually got a really better entry than me. He took an OB continuation, or not continuation. He took an OB entry here. I think I'll have to double check that, or if it was in our trade later. But someone took an OB entry model here at this, which obviously gave them more risk reward than me. So, it is what it is, man. I have obviously very clear target here at the origin here. Why? Because there's literally nothing else to target here. Everything here is fully mitigated. This just looks like trend line liquidity to me to get swept out. So very straightforward trade here. Held it for a very long time though, I will say. Definitely not favorable conditions once I saw this. But as soon as I saw something like this where price broke out cleanly and gave a clean actual range, I'm confident taking solid trades, man. I was looking for this and I should have adapted here. That's all I should have done. I should have adapted here and had a more conservative TP. Maybe within the range, right? But, it's all good. Why? Because I managed my trade properly. Yes, if I held the trade the whole time with no break even or anything, I would have hit 5R. But am I holding my trade for like 4 hours? Very unlikely. Sometimes I do, but very unlikely. And it's not even worth the mental capital or mental stress to hold that for 3 hours at that point. It's better to just let it go, wait for a better, clearer setup, okay? When conditions are this bad, listen to that advice. If conditions are good, sure, hold it till your full TP. So this was just, it is what it is. I should have been a bit more smarter with my TP here, but that's hindsight. It's all good, right? But again, it's not fully hindsight because I should have recognized this earlier. But my bias changed because I saw clear price action, clear up again. Anyway, point is, it already happened in the past. It is what it is. This is the IFG setup short here, and one of the confluences of where this IFG is located makes a very high probability. Again, I cover that specifically in the course modules. So here is the trade. This one landed me 1R because I trailed my stop loss above this high here at this point. After holding for 2 hours, basically, I was just done with it, man. I basically just set my trailing stop loss here and kind of just left the computer. Screw that. I'm not going to stay here for 2 hours and stress over a trade. So, trail stop loss there. And at least I avoided all this chop. Essentially, if you're trading this here, you'd probably get chopped up. So, at least I avoided the chop here. Yes, there's definitely entry models I see here, but it's just not clean delivery. And I'm sure a lot of people online were definitely trading this chop here without recognizing that they need closer conservative TPs. They need to manage their trades better, more aggressively. You probably got multiple break evens here before getting that big win. So just something to keep in mind. Either you have multiple break evens and then you hit that big win, or you just have a lot of small winning trades. And that's completely okay in market conditions like this. That's just called you adapting. And it comes short with a little bit more experience. But it doesn't take a lot of experience really to read this. Like, I feel like a high schooler, middle schooler can see this and say, yeah, it's ranging, it's consolidating. It shouldn't be, it's not really a huge experience thing either, I would say. It's just more so, are you willing to adapt, yes or no? If you're too strict on yourself, and this is where rules come into play too, because having strict rules is good and all, but there's sometimes where you have to break them because of market conditions not being favorable like this, right? Otherwise, if you keep sticking to those rules when price is telling you no, it's gonna be a little rough. You might still end the day green. That's complete cool and all, but you could still make more, You tapped into origin here. You see how I avoided. After I took this trailing stop loss hit of 1 risk reward here, winner, you see how I avoided all this mess garbage here? Because I was waiting for all this to sweep. Right? Again, for a range like this, you want to wait for sweeps of liquidity. We have 2 highs, clear highs here we can sweep. Or 1, 2, 3. 1, 2, wow, we have 3. It's like trend line liquidity right here to me. We wait for all that to sweep into an origin. Is there anything above? No, there's not. There's really not anything above. I don't trade equal highs. I know some people might see this as equal highs or relative equal highs. I don't trade that. To me, because I've seen too many times where price does not go for those. So draw liquidity is more important to me and trend. So tapped into origin here perfectly. All I'm doing is waiting patiently for my entry model. Whatever your entry model is, I don't care. Just have something to confirm your trade and enter off, and I got it here. For 5-year sword, if I kept my stop out here, it would have been 4. Not huge difference really. Looking back, I probably should have had a little wider stop here because it's not a big risk reward difference and would have protected me in case we did want to do like a internal sweep here. But anyway, it's all good. Took a 5-hour win and we finally got towards my TP. Now you may ask, how was I so confident in this trade now holding all the way towards this low instead of like maybe targeting here, here, or here? Or basically these internal conservative TPs. Because think about it, if I was targeting these internal conservative TPs, right? Say I was targeting here, what would a bot do? What would like someone that thought they coded an algorithm and the algorithm works forever do? You're gonna be spamming entries, right? I guarantee it. You're gonna take this entry here, loss. You're gonna take this mitigation here, take this entry here, boom, break even or loss. You just took 2 losses when I'm basically making money while you're losing because my trade is going more in profit. That's why you need context in your trading and you can't be spamming entries, man. Especially when you're backtesting, you should not be spamming entries. If you're spamming entries, it's just not a good habit, first of all. And second of all, you're not building that intuition and experience. So why was I so confident in this? Well, first of all, the main thing really was we swept all this internal liquidity and we don't have anything above, right? Like I said earlier. And we have the origin here is the only thing that's left. If this was the flip, maybe not this crazy target, but this is the origin and there's really nothing else for a price to go for at this point. After we already have this new range of liquidity. There's no need, in my opinion, at this point to sweep more liquidity. We have the liquidity right here. There's people shorting here. Even at this entry, you'd say it's good. They get stopped out, as you can see right here. So that's a ton of liquidity. It's going to fuel the market, and boom. 5-year sword here to the T, and it went dumped even further. Obviously, like I said, I was anticipating a huge dump move. I missed a lot of profit here. I'm going to be honest with y'all. I missed like more than double my profit. Anyway, it's all good. You know, this is probably what he's playing out. I just wasn't, again, entirely too confident just because I didn't want something to occur again where we like sweep this and then we just get more consolidation, even though I was expecting a big move. To me, it's just not worth it at that point. I'm already up 5-year sword for a day, and I sat through all this to wait for this trade. I'd rather not risk this trade potentially going back to break even for a mitigation cycle to go lower. I'm trying to take my money and just end the day, man. It's already 2 p.m. and that's already late to me for trading. I typically finish for the most part like within the first 3 hours kill zone. So that's it for y'all, for me, man. I hope you guys do enjoy this trade recap. I gone through a lot of information in this video. Hope you guys have taken away a lot of stuff from this video about market conditions and how you can basically improve your trading. And I'll see you guys in the free Discord or the course and mentorship.